Another weekly market breakdown. Now, as always, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. This week we are going to focus on the Canadian pairs because the CAD has been quite strong in terms of fundamental data, and we saw some more positive fundamental data that was released for the CAD in last week. So these are the pairs that we are going to add for watch list for this week. And we're going to start with USD Cad. Starting on the monthly time frame, what do we see? Here from a monthly perspective, we can see how the market had printed this level of support, broke below that, and we can see how the market is testing it as resistance once again, giving us an indication there's definitely a pullback expected for the market to go and test that previous level of support that it had created there as well, which we are going to use as a long-term target in the market when looking for potential selling opportunities. Now on the weekly time frame, what do we see? Now from a weekly perspective, we can see how the market has just completed this information to the neckline. Now after an information, you obviously expect to pull back to the neckline before the continuation to the downside. Now there is a good possibility that we could potentially see the market pull back slightly higher, but based off the price action that we currently have, I foresee the market just continue to drop in terms of where it is now. If you drop down on the daily time frame, what do we see? Now from a daily perspective, it's very clear over here. We can see how the market at this level over here tested as a level of support. Market broke below that, testing it as resistance, giving us a further confluence that we can definitely expect to move to the downside to take place. Now the best way to approach the situation is quite simple. Now you can either just enter the market at where it is now and ride the wave to the downside, but when using a more safer approach, the best way to approach the situation is to wait for the market to break below this level of support that was once turned resistance, and once that level of support gets broken, it would then be turned resistance once again, giving us the confluence of the head and shoulders pattern, which is considered a bearish pattern from a technical perspective. In doing so, the market would then give us a higher probability for the market to go and hit that previous level of support as identified from a monthly perspective. Next up, we are going to take a look at the Eurocat. Now if you start here on the monthly time frame, what do we see? Now from a monthly perspective, we can obviously see how Eurocat has been quite bearish, being the weakest performing currency that we know. Now there is a very big possibility for the market to come and test these previous lows. In fact, for the market to come and hit this previous low that the market had created over here, because we know that's where all the liquidity is currently sitting in the market. And if you look left, you can see that was also acting as a strong level, giving us an indication that we can definitely expect this market to continue to the downside there as well. Now from a weekly perspective, what do we see? Now based off the weekly time frame, firstly we can see how the market had printed and broken multiple structures. First, the market printed this level of support, broken it, was tested as a resistance. The market also last week closed below this strong level of support that was also turned resistance there as well. Now if you drop down on the daily time frame, what do we see? Now from a daily perspective, it's clear that the market had printed this impulse, and after an impulse you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low. You can see how the market had tested and rejected the 38.2, telling us that the downward momentum is quite strong. We also have the confluence of the market that printed the strong level of support, got broken, tested as resistance, and the market strongly tested and rejected that level as well. Now we are going to use this as our first take profit level, and then potentially, if you have the patience, you can definitely continue to ride the wave to the downside there as well. Next up, we do have CAD CHF, and starting on the monthly time frame, what do we see? Now from a monthly perspective, the CAD CHF has been one of the pairs that has just been moving sideways for quite some time, and I think it's definitely time for a breakout at the moment. Now if you look on the at the monthly time frame, you can see how the market had been stuck within this consolidation phase. Now there's obviously a possibility for the market to pull back, but if you dig a bit deeper, you can see how the market had printed the strong level of resistance, and we can see how the market is currently breaking above that level of resistance as well. Now if you look at the weekly time frame, what do we see? Now from a weekly perspective, we can see how the market had just completed this W formation. Now after a W formation, you expect to pull back to the neckline before the continuation to the downside, and that is exactly what the market had given us with this rejection over here, is indicating to us that we can definitely see the potential market move to the upside. Now if you drop down on the daily time frame, what do we see? Now from a daily perspective, we have to be reactive, not predictive. Firstly, it's clear that the market had printed this massive impulse, that correction. We had this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Also, if you take your Fibonacci from the low to the high, you can see how the market tested and rejected the 61.8, which is known as the golden ratio. So there is a good possibility that we can see CAD CHF go and test this the minus 27, which is the first take profit level from exactly where the market is now. We can also see based off last week's close, this level over here acted as a strong level of resistance. Mark broke above that, support did not hold, mark broke below that, came back to test resistance, broke above that, tested it as resistance, and we finally closed above that, giving us an indication that we can definitely expect this market to continue to the upside. Now, as traders, we have to be reactive and not predictive. We have to learn to adapt to the ever-changing market environment. Now, there's a high possibility for the market to just continue up from where it is now. We are hitting that minus 27 as located from the Fibonacci taken on this impulse, on this daily impulse. We will have the confluence of the inverted head and shoulders pattern and the confluence of the market hitting the 61.8, which is known as the golden ratio, giving us a further confluence. We can expect the market to continue to the upside. Next up, we do have a GBP CAD. If you start here on the monthly time frame, what do we see? Now, clearly from a monthly perspective, we can firstly see that the GBP CAD over here has also been kind of moving sideways, but we can see how the market had finally broken out of this consolidation phase over here. Now, this area over here has acted as a level of support, resistance, support, and the market finally broke out from that perspective. Now, there is a high probability for the market to go and test these levels at the bottom over there, so we're going to use that as our take profit level in the market. Now, if you drop down on the weekly time frame, what do we see? Now, here on the weekly time frame, it's quite clear how the market printed this massive impulse. Now, we can obviously see the last structure that the market had created was sitting at this level, right? Now, apart from this structure, this was also one of the most recent and important structures that the market had broken out from, came to test it, and then the market printed new structure over here. Market broke below that, never came to test it there as well. But because we expect the market to continue lower on the strength of a CAD, we definitely expect GBP to continue this bearish momentum to the downside. Now, if you look at the kind of situation that we have here at the moment, is that the market had now recently printed this structure that I created over here. Now, this level over here is now acting as a level of support, and this level over here is acting as a level of resistance, because we know that wherever there's a red candle and a green candle printed next to each other, that is considered structure in the market. Now, the easiest way to approach the situation is going into next week is wait for a clear daily break below this level. Then what we're all going to wait for is the pullback, because why? Once this level of support gets broken, it would then become resistance. I can definitely ride this wave to the downside for the market to go and test the previous monthly support as well. Now, if we look at the the AUD CAD, starting on the monthly time frame, what do we see? Now, AUD CAD from a monthly perspective, as we can see, has been rejected quite aggressively. But firstly, if we look here on the monthly time frame, we can see over here that this level over here in the market had acted as a level of support. The market broke below that, came to test it as resistance, and we finally got the break above that. But the market had also printed this overextended W formation. Now, after an overextended W formation, you always expect a pullback to the left leg before the continuation to the upside. And the Australian dollar has also been known as a very strong currency for the past couple of days, and that's why we saw that aggressive bullish momentum on AUD CAD there as well. Now, we can see us on the weekly time frame, we can see how the market had been rejecting the strong level of resistance last week. And what the market literally did was the market went and tested that previous level in the market over there, and then this weekly candle was actually forced to close below this area, giving us a further confluence that we can definitely expect the market to continue lower. Now, there is a possibility that this market could just go up until here, but trust me, that's probably going to be more pips than most successful traders gets in an entire month or a couple of months as well. Now, if you look at the daily time frame, what do we see? Now, here on the daily time frame, I can see how the market Friday had closed below this very important structure over here. This level here acted as a level of resistance, then resistance again, just close that, then resistance again, And now what's happening is that that resistance got broken, it became support, support did not hold. And the best way to approach the situation, if you haven't guessed it by now, is to wait for the market to slightly pull back lower. Then on the retest, we're going to start looking for selling opportunities for the market to then give us the confluence of this head and shoulders pattern over here, and also for the market to go and hit that previous level of support as identified from a consolidation perspective. Now guys, that's all from my side. Thank you for your time, and as always, cheers for years.